Good afternoon, everyone, and thank you for joining me today at the Spark Festival, and thanks to everyone at the Spark Festival for hosting this. I've been tuning in throughout the last few days. There's been some incredibly interesting and exciting and some challenging presentations, which I've gotten a lot of joy out of, and I hope some of you have as well. Just a quick way of introduction. I'm Anthony Nantes. I'm the CEO, founder of Wisr, and the broad topic I'm going to talk to you guys about today is around empowerment for financial empowerment for millennials, and probably going to take a bit of a broad and roundabout loop to kind of get you there, and not the normal kind of approach. I'm not going to throw a bunch of stats at you and data and talk you through it, but more think about cognitively, behaviorally, what does this space mean, and what's likely to happen in the next little while, and what's happening at the moment. A little bit about us, just very quickly, just to understand some context in case you're not aware of Wisr. We're an ASX-listed consumer finance company. We have a vision and a purpose around bringing financial wellness to all Australians. We've started by building a purpose-led company. It's built into our DNA. It's how we've started, and really aligned to this vision around financial wellness for every Australian. And what that's caused us to really do is really try to start to reinvent what a consumer lending company can be. And a lot of what I'm going to talk to you about today is, the way we think about not just millennials, but particularly millennials, and how we have to rethink about reinventing the relationship with debt, with credit, and the way they interact with financial services more holistically. And I'm also going to talk a little bit about why we're building a purpose-led company and why it's so important to us. But this definitely isn't going to be a song and dance all about Wisr, but a bit of an intro on us for some context is worthwhile. We are growing very fast. So I think a lot of the things that we're doing, the way we're thinking about our customers, the way we're aligning behind our customers' best interests and focusing on their financial wellness is flowing through to things like growth in revenue and growth in customer acquisition and growth in the company overall. And I think that's true just very broadly. There's lots of stats and data that shows that the companies that are purpose-built and purpose-aligned, we've jumped to that all of a sudden. Companies that are purpose-built and aligned around purpose do outperform typically in terms of customer engagement, customer advocacy, around shareholder returns. And they also outperform in terms of being a really great place to work, giving individuals a why about when it comes to coming to a place to work. Why do you want to contribute? Why does your work matter? And I think part of empowering millennials and empowering a workforce is trying to get some of this alignment right. And that's where we spend a lot of time thinking. And it's one of the reasons why, as a company, I think we've been on the receiving end of lots of recognition over the last little while. So look, that's a little bit about Wisr. That's a bit about kind of who we are and what we've done, and some context, I guess, for the rest of the things I'm going to talk to you about today. So the topic of this chat is around empowerment for millennials, and I guess the starting premise that I would lead with is that empowerment is really about knowing how to make good decisions. That's what we think about when we think about trying to empower our customer base and trying to create a business model that delivers empowerment to our customers, is how do we enable them to make good decisions? And there's a lot that goes into trying to do that, and it's certainly not just about kind of how do we deliver a cheaper, faster financial product. That can be a part of it, that can contribute, but that doesn't actually solve for making good decisions. And what's unique or what's interesting about millennials in particular, and why we're going to talk about that group specifically today? Well, I think there's a couple of reasons why millennials are particularly interesting at the moment. One is they are the biggest group in the workforce. I think about 34% of the workforce is millennials. They're ahead of baby boomers, which is now about 25% of the workforce. So they're the biggest group of the workforce, but they represent about 4.2% of the wealth in our society. And so that disparity, I think, is where solving for empowerment for this group becomes really, really important. And where we want to start thinking about designing products or business models even, some of that thinking has to be about addressing some of these types of issues. And that disparity will change over time. And a lot of that will come through empowerment by helping millennials make good choices, helping them make better choices, helping them make smarter choices, to improve their share of wealth as a collective and as they progress through their careers. I think one of the other things that's interesting about millennials is not only does this group have large debts, and most have few assets and not a lot of savings, and we'll talk, I don't think you can have a conversation about millennials and financial empowerment and not bring up buy now, pay later at some point in time. So we'll touch on that as well. But millennials are also more likely to be employed as casuals, contractors in the gig economy, have side hustles, have varied work, have less stable work. And it's the group that's been the most impacted by COVID at the same time. So, coming from a group that were probably not in a great position prior to COVID, certainly post-COVID, we're seeing a flow-on effect as well. So it's a particularly important group to be thinking about. And again, in light of the fact that it is the group that is the biggest group in our workforce today. But I think there's something else that is quite unique and different about millennials. And one of the reasons why, and I think it's been talked about for a long time, and certainly, me chatting about today, millennials as a group isn't the first any of you will have heard about, millennial trends. But I think there is something that is particularly different about this group compared to previous groups. And the thesis that I'd put forward is that it kind of starts like this, because this is what the experience of the group before millennials, so whether that's Gen X or whoever it is, or even baby boomers prior to that, this is the type of experience they grew up with. So the example here is catching a plane on an international flight. Remember when we used to be able to do that? Weren't those the good old days? And I'm sure they're coming back again at some point. But, that experience of all catching a flight together and going somewhere together, that experience used to revolve around that single TV screen that would sit there and play the movie that everyone on the plane would watch. And that was the experience. And, obviously the experience today, and this is indeed the experience that millennials have only ever known, in their time traveling, has been a device per person, whether that's in the back of their chair in front of them, provided by the airline itself, or more likely with their own devices. They've brought their own device into that environment. And so it's no longer this group approach to engaging in content, but this much more personalized one. And I think there's no doubt we can all relate very strongly to the experience in our own homes, whether it's with our own parents or with our own kids or brothers and sisters or whoever it's with. We remember the time when every evening, there was one show on TV. You most likely only had one TV in your house. There was only a couple of channels, maybe 3 or 4 in Australia. You would choose one and the whole family would watch it, or you'd go do something else, because that was the way things worked. And again, this just isn't the experience that millennials have grown up with. This is the experience of today, and it is the experience that millennials have grown up with. A personalization of device, a personalization of choice, and an engagement of content which can be unique even in a shared social setting. And I think this is what makes this group demonstrably different. And certainly from a business point of view, from a business model point of view, from a branding, marketing, messaging point of view, I think the translation to this personalization has probably been not rapid. I think it's getting there, but this is the reality, and it's not just the reality for today, but it's more the case that this is all millennials have ever known. This type of personalization of content, and so their expectations around a whole range of things are just different. I think where I'm going with these examples is that, reach used to be scarce, but attention was really plentiful. You could really capture someone's attention, and now reach is plentiful. You can connect to a millennial almost anywhere. You can connect to them in the bathroom, in that, for a lot of people, maybe it's 5 minutes as they take a bit of time out. You can connect to them in that 5 minutes in the bathroom. It's a space where you never could connect to them before. Right? You can connect them while they're waiting for a bus. You can connect them while they're on the bus. You can connect to them while they're waiting for their food to arrive. You can connect to them while they're waiting for their friends to arrive. There's all these other ways where you can connect to them now. But attention is really scarce. So actually capturing that attention, even though it's so ubiquitous for this group and they're so used to it, is very, very difficult. And so I think as a starting premise, we think about empowering millennials, and if we take the premise that empowerment comes from helping them make good choices, or then personalization of choice and personalization of their experience has to be part of that same conversation. And I think that's where we're seeing, particularly in finance, a trend that's emerging and that will accelerate in the coming years. And that looks a little bit like this. There's lots of different versions of this slide. I've borrowed this one from BI Intelligence, so credit to them for putting this slide together. And there's hundreds of examples of these, and some of them have thousands of more brands on them. As we see an explosion of choice in finance and a complete unbundling of product. There's a famous quote from Bill Gates where he said, banking services will always exist, but banks might not. And I'm kind of paraphrasing it there, so it's not exactly that quote. But the point is that, the traditional experience that happened for ages of particularly the parent group, so baby boomers of millennials, of one financial entity that they have a relationship with, where they did their banking, where they did their payments, where they transferred money, where they borrowed money, where they checked their bank balances and their cash flow. They all did that in that one entity. That has been completely unbundled and is rapidly being unbundled in multiple different ways. And so every single service line that a traditional bank might have offered to baby boomers is being completely unbundled for this millennial generation, who not only are aware of this, but as I've said before, they've grown up like this. They've grown up with bespoke, unique experience. It's personalized to them, wherever they are, on a plane, in their own home, sitting around the TV, right? This is the dynamic that they are used to. And so we're seeing this trend emerge and globally as this plays out. Yet at the same time, there's some other interesting sides of this, right? So if you look at the mortgage market in Australia, and the millennials are entering this market and are a portion of this market now, and a growing portion. Yet if you look at the mortgage market in Australia, the big four banks still control 75 to 80% of all mortgages in Australia. So despite all of this, despite personalization, despite rapid choice, despite explosion of fintech, something as core as a mortgage offering still only really gets dominated by those four entities that have been around for decades and decades. And not only have they retained this market share on this particular product, and it's not a product that Wisr operates in, so it's an interesting one for us to kind of talk about on the side. But at the same time as this, there's another 95 odd ADIs in Australia, so other kind of banks, and a lot of them offer mortgage, most of them offer mortgages. And in particular, if you look at the community banks as a subset, community banks in Australia have, for decades, had cheaper interest rates on their home loans than the Big Four. Not always, but by and large, you can always find a community bank, and have always been able to find a community bank that's got a cheaper home loan rate than the Big Four. And yet Australians haven't gone there. They haven't flipped. These community banks haven't taken mass market share with these slightly better rates than the Big Four. And if you are listening to this and you haven't got a mortgage with the Big Four, then probably is a good time to go and check where else you can get a better interest rate, because probably someone besides the Big Four will give you a better interest rate and save you lots of money. But most Australians don't do this, right? Most Australians aren't switching away yet. And I think the yet is the kind of the important part. I think we're starting to see some of this change, but this has been the dynamic today. One of the other areas where we have seen this kind of empowerment with millennials issue play out has been around credit cards. So millennials have, to some extent at least, broadly disengaged with the idea of a credit card. Certainly not in the same way that generations before them have just readily accepted them as one of their first financial products. So previously, a young person's, after a deposit account, so where they'd put, their salary from Macca's or KFC or Coles or wherever it is that was their first job. After that deposit account, typically the first product that a young person might take out would have been a credit card product. That was historically the case. And we've seen this unravel. We've seen the flight towards, buy now, pay later, and what it's done for coupling personalization, choice, and being present, omnipresent at a different point in time in a way that credit cards haven't been. And I think credit cards are a particularly interesting example in this space. And one of the reasons why I think they're an interesting example is if you just conceptually just think about a credit card product and the way it's designed. If you use a credit card regularly and every month you repay that credit card back, so you use the convenience of being able to pay wherever you want to be able to pay, and you pay it off regularly or at the end of each month, not only does the bank not make any money on you, the bank loses money on you. You are causing the bank to lose money. And in fact, the only way the banks make money on credit card products is from people who can't afford to pay it back. Right? So just think about that for a minute. The only way they make money is on people who can't afford to repay. Right? Now, that diametrically opposition of these business models. You have a business model, a product that is designed to only make money off the people who kind of can't afford to be having that product, I think is just a really badly designed product, right? It's not a product that's aligned around empowerment, and it's not a product that's aligned around purpose. And so I don't think it's by accident that we're seeing millennials reject this product en masse and look at other products which maybe are more aligned to the purpose. And the purpose is I want a pair of jeans, I want to defer my payments, and I don't want to have all these other hassles that go along with it. And so I think we see these two things going together. And this whole notion of building companies around purpose, around products that are actually aligned to the right outcome from a customer is a change. Milton Friedman, very classically, the godfather of the markets, so to speak, and all of that kind of stuff for any economist in the room, famously said, the social responsibility of a business is to increase profits, and that was the dynamic for a very, very long time, right? And lots of companies operated with that sole dynamic. And what we've seen recently is that companies that can break away from that mold and put purpose first, and purpose means putting your customer first, and not only just putting your customer first, but then aligning your business model to actually be a win-win, to benefit your customer so that you benefit when they benefit. Right? That's what purpose in financial services could and should be about. What we've seen is some of that purpose-driven companies significantly outperform. It's the crux of how we've built Wisr and why we've built it the way we've built it. The other interesting thing about purpose, though, is that it's almost impossible to retrofit. There's a lot of industry research that says if you didn't start with purpose in your company, it's kind of hard to come in later on and have a new CEO come say, hey guys, here's our new purpose. And then try to re-engineer all of your products and all your services to kind of line up behind this purpose. So I'm going to go a little sideways for a couple minutes here with me. So hopefully you can follow along for a little bit. A lot of you will have heard of this one of these famous philosophical paradoxes. It's called the trolley problem. It's a famous kind of moral and ethical dilemma that's proposed, which is around a trolley or a train or a tram car that's heading down a set of rails, and that rail car is going to crash into a bunch of people and probably kill them. So 4 or 5 people in this example. And you as an innocent bystander are sitting there and watching it, and that's going to happen. If you don't do anything, that is going to happen. And the moral dilemma is you can intervene. So you can stand next to a lever and pull this lever and divert this tram or this trolley. It's kind of an old dilemma, so it was called a trolley back then. And if you do that, you're going to divert this other track where one individual happens to be laying down and tied up. And so you're going to kill an individual. But you will do it. Your intervention will kill that person. And so the moral dilemma is, what would you do? Would you do nothing and not intervene and have it not in your hands and watch 5 people die? Or would you intervene and cause the death of one person? And so it's a really interesting philosophical moral idea, right? And a challenge. And you might have your own answer to that, and lots of people do. So how is it relevant here? Well, the way I would make it relevant into, I think, the way a lot of finance has been built and financial products and financial companies have been built without purpose in mind and without customer in mind is when it comes down to the individual who's there trying to make a decision, they're trying to make a decision around, because of this diametrically opposed interaction between my profit at the expense of my customer, they have to make a decision. Either I'm going to make money and get a better outcome, or the customer is going to. But one of us is going to get hit here. And so people who operate, it's not, as we saw in the Royal Commission of Banking and Finance, it wasn't individuals necessarily there weren't bad people working banks. Lots of people, lots of our friends, our families, our husbands, wives, daughters, best friends working banks, they are good people. But they're forced to make this decision every day, right, against the customer, our profit or your financial outcome. And I think that's a decision that's not fair to be making, and I think that needs to be changed. It does get a little bit complex. It's not as simple as that metaphor. Most of you will be across the old notion of the prisoner's dilemma, which is the origin of game theory. And if you haven't had a chance to ever look into the prisoner's dilemma, most of you probably have. But if you haven't had a chance, go and read about it. It's a great little thought experience. It really created modern game theory, which is to say, your actions and the interactions of you individually have to be taken into account into the environment which you operate. So if you work in a competitive environment, you can't just decide to do one thing or another. You have to think about, what are we doing compared to what everyone else is doing? And we see the big 4 banks do this all the time with the way they move interest rates and mortgage rates, and in response to, one of them moves, they all move. That's prisoner's dilemma playing out in front of us, right? That the right outcome happens at kind of this group reflection level. And so I would kind of say there's this kind of conversion of these two. This is, why is it patent pending's idea? But if you bring these 2 things together, you've kind of got these 2 trolleys running down, and you have this trolley dilemma, which is also a prisoner's dilemma, because everyone's trying to work out, how do you switch rails and do something different and get a better outcome for customers at the same time. And these are hard philosophical problems to solve. One of the things that's really interesting about that particular, this is a bit of a side note, I've got 3 young children, and not because I'm the sadist, just because I'm interested in this stuff. I presented that exact trolley problem to my kids a little while ago, and particularly to my 3.5-year-old daughter, with one teddy bear on one set of train tracks and some of her other favorite dolls on the other ones, and asked her, what are you going to do? How are you going to move this, and are you going to intervene, or are you going to let these other dolls get hit? And what she did, I thought was remarkable, is she just went and grabbed a whole bunch of other train tracks and built a new rail and said, well, I'm just going to take the rail off this way. And it really struck me. I thought that's the right metaphor. And I think empowering millennials and building the new wave of purpose-led fintech companies in this space is about building new rails. It's actually not about delivering the same old products that have been delivered before. It's about saying, how do we do this differently? And I think that starts with purpose matters. Building a purpose-led company matters. And we're seeing this movement. So, we go forward 50 years, you get Larry Fink controls one of the biggest investment portfolios in the world. And he talks about only investing in companies that are purpose-led now. And moving BlackRock's investment portfolio towards companies that have a genuine purpose that they can understand and that they can line up behind as an investor. And in his words, companies that ignore that will stumble and fail. And I for one, truly believe that that's the case, and that's what we're going to see. And to put it in more simple terms, you just don't have to be a prick to profit, right? You can build business models that get good outcomes for your customers and allow you to win at the same time. Well, those business models exist, and they certainly exist in finance. They can be win-win relationships. So we go back to this idea of millennials and empowerment. And empowerment is knowing how to make good decisions. That's what we think about. And we have this big fragmentation happening at the moment. This is courtesy of Goldman Sachs, who are saying, we have all these things going on. It's all being unbundled. But what does that actually mean in real terms? And so I want to give you one more kind of example to illustrate this, which I think is where some of this starts to really come together for empowering millennials and making a difference in the way financial products, services are built, distributed, and undertaken. So there's this amazing fact about horses. And so the fact about horses pulling a trolley is that one individual horse, on average, can pull 8,000 pounds. So you give one horse, they can carry a cart behind them that can carry 8,000 pounds. And if I asked you the question, what if I gave you two horses? So let's tie two horses to the front of that cart. How much could those two horses carry together? And you would be exceptionally logical if you said 16,000 pounds would be the obvious answer. But the actual answer is 24,000 pounds. So if you get two horses pulling in the same direction at the front of a cart, they don't just double the output, they actually triple it, just by the fact of working together. And that's quite interesting. But the most remarkable part about this is that, and it's, I think, hilarious too, is that if these horses like each other, so if these horses know each other, if they play well together, if these horses are friends, and you put the same two horses that are friends in front of a cart, then instead of getting 24,000 pounds of pull, you get 32,000 pounds, but only if the horses are friends. Right? So only if they get along well. So how's this playing out in real terms? How's this playing out in finance? I'll give you another example. Coming back to the TV where I started, of how we're engaging with TV at the moment. Here's my two TV remotes, a photo of the two TV remotes in my house that look like normal TV remotes to the normal line. Nothing's really changed about them. But there's something remarkably different about these two TV remotes, which I bought in the last couple of years, that from every other TV remote from the last few decades didn't exist. And if you zoom up on it, it's these buttons. It's Netflix and Amazon have paired with the TV remote to put themselves there right in that moment of when I'm choosing a channel. I can press one button and get that service. And that's two horses working together who like each other, who can get a better outcome. And so where does all this go? Okay, first of all, the catch is that there's no one ring to rule them all. Right? Nothing's coming back to one center place. I don't believe that's happening. I think it's about lots of organizations working out how to play well together to empower millennials around choice and around outcome. And I think that goes to building something different. I think that goes to using game theory, product theory, behavioral techniques, and cognitive dissonance to actually build products the right way. So that when we ask, something like Alexa, you've got some credit card debt, very quickly Alexa can tell you, I can just consolidate that back to Wisr very quickly for you. We do that by empowering customers to make very, very good decisions. And therefore, I think the future of fintech is purpose-led. That's where this is all going in the end. Okay, there's a lot in there. Talking quite quickly, managed to get just in on time. Thanks very much for tuning in. If you have, enjoy the rest of the festival. Thanks to Spark for hosting me, and feel free to get in touch at any time. Thanks a lot for your time.